my fellow investors. I wanted to make a quick video today. I'm going to be gone for a week. I got to take a week vacation from retirement. Yeah, tough life. So I wanted to get this video out real quick. Am I jumping on the ULTY hype train? It's a very popular ETF and there has been a lot of hype around it. People are buying in like crazy, assets under management shooting up to the moon. Is it something that I want to invest in, or do I think I could do something different with my portfolio and be more satisfied with the results other than putting a bunch of money into ULTY? So I'm going to go over that real quick and just kind of give you my thoughts. So I was looking over the holdings of ULTY, and first thing that jumps out to me, well, I already own some of these, some of these holdings. Palantir, already in it. I have growth stock and I own Palantir, PLTR stock. There's some I don't have. Coinbase, I have Coinbase, I have MicroStrategy. So there's a few that I already own. If I want to buy, more Palantir, more MicroStrategy, and more Coinbase, I would just, or the options funds of those stocks, I would just do that. I would just buy more. I don't really need ULTY to do that. Another thing I was looking at, and there's a couple of these holdings that instead of, trading options using a strike price that gets you capped, what you could do is you could just buy the round hill weekly one, that's the way I would go. So there's a couple already, and there's going to be more that are added. So Tesla, you have Tesla, you could just buy the one that doesn't use a strike price and doesn't get capped, which gives you higher total returns. Palantir, instead of doing Palantir, the weighting is 4.64%. Well, the reinvesting money that I use to buy more shares, I could just take about 5% of that and put it into the round hill weekly one. I don't get capped, and I would expect higher total returns if I'm still bullish on it and it in fact keeps going up in price. So, those are some of the things I would look at instead of buying into ULTY. I think I could do better, just being more selective. One of the arguments would be, for ULTY, well, I could just, diversify this way. You don't want just, 3 or 4 holdings out of these holdings that are listed here, but you would want to diversify. Okay, well, let's look at some of those, because I was looking at the charts of some of these holdings, and some of them I'm very impressed with. And I understand, they're really going after implied volatility. Now, it states in the prospectus, capital gains is part of that, right? I don't know how much part of that it is, but that is definitely a factor in choosing these underlyings. But it's really about implied volatility. And, just at face value, I think that's a great strategy, kind of chasing implied volatility in an options trading fund. I don't think that's necessarily a bad thing. But let's look at the chart and the capital returns of some of these holdings. Rigetti 1-year chart is really good. I mean, this was it was basically a penny stock, just a year ago, down under $1. 6 months chart is down -28%. So I don't really like the 6-month chart of Rigetti. Again, I understand the whole concept. We're going after IV and to go after those big distributions. Tempest AI 1-year chart looks good, plus 147.97%. 6-month chart looks great, 93.65%. So Tempest AI, I do like the chart of Tempest AI. Now, another thing though that I would consider, with my investing style, is I could look at these holdings and get an idea, and maybe I don't, trade options on them. Some of these, they don't have an options fund available as of now, outside of ULTY, obviously. So, but you could use this as your growth play. Maybe you buy some Tempest AI stock. There's some of these holdings that I would consider doing that. I would be selective. I believe in being selective, but that's one way you could do it. So you can look at the holdings of ULTY, go after higher total returns, buy some of these underlyings that are performing well, and you like the chart and you like all the numbers and how it's performing. Or you could go into something that doesn't use a strike price and doesn't get you capped, so you get more total returns that way while still collecting weekly premium. Okay, so that's the way I would do it. Let's look at some more. Space Mobile, 6-month chart, looking great. 105.11% high implied volatility. 1-year chart, 350%. This looks good. Some of these holdings are excellent. Like, I see the hype. I understand the hype. I do. I get it. And the implied volatility is doing well. So, I really like some of these holdings. Again, I would consider buying some of these underlyings and just having it in my growth portfolio. First Solar, this is one of the holdings. It's only 2.67% of the holding, so it's not hugely weighted. So again, that's something you can consider is buying it, buying one of these and just putting it in your growth portfolio. But the 6-month chart, negative 15%. 1-year chart, negative 37.23%. I'm not impressed with the lack of capital gains of First Solar. Vista Corp, 6-month chart, 32.12%, doing good. 1-year chart, 121%. That one's doing well. Mara Holdings, okay, so this is kind of like, you want to be into a Bitcoin treasury, but you don't just want to be in MicroStrategy. All right, so 6-month chart, going off of that, the Bitcoin holdings they have on their books, negative 20.88%, not great. 1-year chart, negative 21.17. Let's compare that to MicroStrategy. What do I always say? Go with the winning horse. MicroStrategy, 13.36%. 1-year chart, 165.23%. I'm sorry, but I'm just going to go with strategy on this one. I don't really want to diversify into Mara. That's just me. Also, there's going to be a round hill weekly with no strike price set on MicroStrategy coming up. So I already own a lot of Misty. So, that's really what this comes down to is I look at this and I see, there's some good things about ULTY. I understand the appeal. And if you just want to chase IV and get, good distributions and a nice paycheck, this is something you could look at. You diversify, but I really don't like some of these holdings. I don't like what I see. And if you have that lack of capital gains, or you see the NAV of the underlying going down, well, this is sitting at $6.25 currently. That could drop further. That would be my concern is, the NAV just will drop more. It's a possibility. Could it be carried by the others? Yes, of course they could. And you are paying, 1.24% for someone to kind of help you with that, to kind of, chase the volatility and get these big distributions. I haven't bought into this yet. And after going over these holdings, I just think, this is for me personally. I want to go after total returns. And in doing that, I think I could do a better job myself just by, being selective, buying some of the underlyings, which some I already have again, or a different strategy, an ETF that uses a different strategy outside of kind of what Yieldmax is doing with their options trading. So do I think it's horrible? No, I don't think it's horrible. I understand why some investors just want to buy into, something that's already diversified and let fund managers take care of it and just go after IV and to some extent capital gains also. And it has been performing better lately. I just haven't bought into it because, again, I feel like I can do a better job with total returns by being more selective and to do things a little bit differently. So that's what I'm doing. That's kind of my verdict.